Welcome to this April 7th virtual Q&A session. I'm here to provide some insights and information on the emerging landscape that we are all working through as a result of COVID-19 and the various responses. I'm Melanie Schmidt. I'm a strategy consultant, have the opportunity to work with individuals across sector. I help them focus forward and move beyond business as usual through Timpano Group and Timpano Consulting. And we're convening these weekly sessions really as an opportunity to create a learning community, as an opportunity for all of us to experiment with technology, see other people, meet some people, hear questions, but also get as much current information and insights as we can. And knowing that this information does continue to change. There are certain things about it that are somewhat constant. There are other things that continue to fluctuate. And so we know the information and insights that we're sharing are as of April 7th, 2020, 1:06 p.m. Central Time. And we will continue to do our best to provide current information. These will be weekly sessions, so they will go through, again, April, since we anticipate that many of us will have questions and continue to be working from alternate locations at least through the month of April. So these will be Tuesdays, 1 p.m. We'll continue to focus on emerging workplace legal and HR issues. We'll also be adding supplemental conversations that will focus in on additional topics such as strategy planning, fundraising, technology, and then anything else that emerges from the participants in this learning community in terms of things that you would like to have for areas of emphasis in education. So I'm going to go ahead and end that polling and share the results so you all can see who's in the room with us here as well. Today we have about 80% nonprofit staff and board, with also some representation from business consultants and others. So thank you all for being here. Other advisors on the call today will be Mindy Rowland with Spark LLC, also Melody Bunting with Wagner CPAs, and Jeff Femright with Scholl's Nonprofit Law. And there are others who are here who will jump in as their peers invite them, but we'll go ahead and rely on the three of them to really move the conversation forward. Please use that the chat box to submit questions, and also asking that if you are comfortable, to put that video on so we can see as many faces, even if you are in a baseball cap, a hoodie, or whatever else attire, just hoping for some clothes. And then we can see you, and also those will be blurred in the recording, as I mentioned before. So what I'd like to do again to start this off is a moment of centering. There is a lot happening, and there's a lot of stuff going on in our minds and with our emotions. So just going to take a few moments to share some words from Douglas Malich, and then we will go ahead and get started. So the tree that never had to fight for sun and sky and air and light, but stood out in the open plain and always got its share of rain, never became a forest king, but lived and died a scrubby thing. Good timber does not grow with ease. The stronger wind, the stronger trees. Words for all of us as we come together and think about questions that we have and the insights that we need in order to move forward and come through these windy times and become stronger trees as individuals and as organizations. So thank you for that. We'd like to actually start. We want to thank everyone for who provided questions in advance. That was very helpful for the advisors. And actually would like to start, Mindy, with you, if we might. Just one of the questions had to do with knowing that we're dealing with times when people are trying to contain payroll costs and deal with unforeseen circumstances. If you could just put that baseline out for people of what is the difference between laying off employees and furloughing them.
Just real quick, I'm Mindy. I'm from Spark HR. I do legal and HR consulting for nonprofit organizations and small businesses here in Wisconsin. This is my third Q&A, so hopefully I'm not getting too old and it's not old hat at this point. But anyway, to your question about the difference between layoffs and furloughs, people throw those terms around very differently, and until probably 3 weeks ago, they were often used synonymously. In fact, I think I'd given advice, maybe even over the course of the last 3 weeks. Well, a layoff means this, but a furlough means this. But really, for substantive intents and purposes, they're not that different. The terms are getting solidified right now as they're being used very distinctly and intentionally in some of these laws coming out. If you think of furlough as more friendly, the F's, that's maybe a good way to remember the two of them. A layoff is when you lay somebody off and you probably don't have an intention of bringing them back, or at least you just don't know. So you lay somebody off, they no longer have a job. They don't have a job, they should apply for unemployment, they should feel free to go look for another job, and all those kinds of things that happen when you lose your job. A furlough can mean that instead of saying, okay, employee, we don't have any work for you, see you later, like a run of every time you let an employee go, a furlough seems to have an intent of, we think you'll be back. We might know when. We might know that all of our employees are taking 3 weeks off and then we're going to bring everybody back. A furlough may mean every one of our employees are forced to take a week off during the month of April unpaid, and maybe 1 week for the next month for the foreseeable future. Or a furlough can mean we intend for you to come back, we hope you're going to come back, but we maybe just don't know when you're going to come back. So, but the intent for a furlough is you hope your employees are actually going to come back. That usually means, and not always, but it usually means that you can continue on with their benefits because they're furloughed as opposed to no longer on your payroll, no longer an employee. That said, though, a furloughed employee can go look for other work. They are absolutely permitted to go find another job, as well as apply for unemployment. And some of the best advice that I can give you is that if you have employees that you have either furloughed or laid off or don't have any work for, tell them to go apply for unemployment. I saw a couple questions in advance about partial unemployment and is there a magic number as far as if I've reduced my employees' hours. I wouldn't call it a magic number, but there certainly is a calculation. And that calculation, people who have just lost some of their hours are still eligible to get that difference somewhat taken care of by applying for unemployment. So if you've got employees out there that are not working full-time, regardless of whether you call it a layoff or a furlough, they should definitely be applying for unemployment right now.
Great, thank you for that, Mindy. One of the other questions that had come up, and this seems to be one that, particularly with our audience focused on nonprofits, if people are laid off, can they volunteer their time to do some of their job?
So no, and I'm very sorry because I know people want it. I saw those questions too. I love the thought of, hey, even if I'm not getting paid, I definitely want to come and do my work. That causes me a lot of concern because if you've got employees who are now turned volunteers, they're probably doing a lot of their same job duties they were doing before, and so they should be being paid. So you can run afoul of the Fair Labor Standards Act, Wisconsin state counterpart, the wage division, for not paying people for doing their work. If you are going to do that, and I'm telling you, I don't think you should. If you are, you should definitely have them sign a document that says, I'm volunteering my time. I am not an employee. I do not expect to get paid. But just keep in mind that if they get hurt on the job, for example, they're really going to want to file a workers' compensation claim. And for you to at that point say they're not employees, they're volunteers, you're going to have a really hard time winning that battle. And if you're not paying workers' compensation for volunteers, but somebody has an injury and it's held that that they are an employee and you don't have coverage for that, you're going to be on the hook up for it personally. And it's going to be a messy, drawn out battle. And that's just one of the big concerns, providing benefits and all those kinds of things for people that you right now don't think are employees, but when times get tough, those people may change their mindsets and say, I think I'm a lot better off if I were considered an employee. Or they see that you get the PPP loan, for example, and they come in and they say, well, look, now you've got all this money. How about you pay me for all that volunteer time I did? And that's not how it works. So my message and my advice is not to do that if you can at all avoid it.
Mindy, do you have any thoughts that you would share for organizations where with the additional federal add-on to unemployment, there's the question about why would employees want to come back to work before July 30th if in fact they could make more on unemployment than through their full salary?
Yeah, that is a balancing act both for employers and for employees right now, because with that extra $600 a week that the federal government's putting out there with the unemployment, there are people who will make about the same amount of money, and there are some who will make even a bit more. And so why would they come back to work? And the harsh answer is, well, if you want a job when all of this is over, you'll come back to work. And when a company, whether it's a nonprofit or a for-profit business, is looking who to bring back, it's going to bring back those employees who were the ones who came back to begin with. That's probably the only analysis I can give you. I do think, though, that it's a fair concern. I have seen employers offering, it sounds crazy in a time like this, but signing bonuses in order to get employees over that hump, over that unemployment number, in order to get them back on their payroll. So there are some things that you can do to try to get them back on, but really the threat of long-term employment is probably the biggest stick that I can think of.
Great, thank you for that, Mindy. We'll move over to Melody and Jeff, thinking about the various acronyms that we're all dealing with right now with the SBA, PPP, EIDL, and everything else. Melody, if we might start with you. First, give us a little bit about who you are, and then launch in, if you would, to just helping people understand potentially the distinction between what is the PPP versus the EIDL, so that they have an understanding about that Paycheck Protection Program versus the economic injury disaster loans.
Sure, you bet. Hi, everybody. My name is Melody Bunting. I work at Wagner CPAs. My title there is Training and Career Development Manager, because I have this odd combination of public accounting experience in my background as well as higher education. So I've been incredibly blessed by the partners at Wagner who allow me to do a lot of nonprofit training as well as instigating some other things. So I'm one of those who loves to learn. Diving into this has certainly been an adventure, to say the least. The primary difference, or the big points of difference between the Payment Protection Act, or the PPP, and the Emergency Injury Loan, the EIDL, is the PPP has a forgiveness or a potential forgiveness piece if you meet the criteria, where the EIDL does not. The interest rate and the repayment period also varies, as well as what are the expenses that you can spend it on. So from a really high level, those are the primary differences. Most people are advising, if at all possible, go for the PPP, because there's just tons of advantages to that money. And that seems to be the focus at the moment. And then looking at other potential aspects of what's in these acts that can help employers and employees as well.
Wonderful. Thank you for that, Melody. With that, Jeff, I wonder if you might come in, share a bit again about who you are, what you do, and then perhaps speak to the question about whether or not organizations can apply for both of the PPP and the EIDL.
Sure. My name is Jeff Bemray, and I'm an attorney at Schulz Nonprofit Law. I help our clients, largely nonprofits, with their real estate and corporate finance issues. And so I've been asked to sit in and talk a bit about these two different loan programs. So the answer to the question is, can you apply for both loans? The answer is yes. You can, and in the right circumstances, you probably should. I think an easier way to think about this is the PPP. It says it in its name. It's a Paycheck Protection Act. That should be your primary focus for funds that you're going to use to either retain or rehire employees. 75 in the PPP is refundable if you do it right. And doing it right is, once you get your funding, you use 75% of it towards employee retention and rehiring. There are a number of eligible expenses that you can use the PPP for. Basically, it's payroll costs plus other types of operational issues. And you can use PPP funds for any of those. But if you want to take advantage of the loan forgiveness component of that program, 75% of your use of loan proceeds has to be for payroll expenses, and the other 25 can be for things like rent, or mortgage payments or service on other types of debt. The EIDL loan is a little bit more flexible, but it's not forgivable. If you secure an EIDL loan, the nice thing about it is the first $10,000 of that loan is deemed a grant that you never have to repay. But then the rest of it is a traditional loan. It's for nonprofits, it's a 30-year loan at 2.75%. And you can use that for any number of business expenses. But unlike the PPP, it's not forgivable. So what we're saying to clients is if you're just working to get through the next couple of months, use your PPP funds for your employees. And if you're looking at your cash flow and saying, boy, we really need help with our rent and some of our other expenses, then apply for an EIDL number and make sure you're keeping those funds, you're using them for different things. The SBA is not going to look kindly on double dipping.
Yeah, that makes good sense. And Melody, this might be more in your realm and thinking about say the application goes out, you get approved, there's success, that money comes in. Are there any considerations that organizations should be taking in terms of how they are accounting for those funds that are coming in?
Yes, it's really important that they do an extraordinary record keeping job, because the forgiveness part of the PPP is going to be dependent on having solid records of how it was spent and meeting the bank's requirements for what they request to authorize or approve, and see that you followed the parameters and issued the funds for, in fact, things that are forgivable. The other important point as to what Jeff was just alluding to, it's going to be real important to keep track of things to make sure that there is clear distinction that you have not spent two different funding sources like the EIDL and the PPP on the same expenditures. So there have been some recommendations made that you put the funds in a separate bank account. As far as I know, most banks are not requiring that, but I have heard of at least a couple situations where banks are requiring it. The important part of it is to have that detailed and complete documentation as to how you're spending the funds so that you can support that going forward.
Wonderful, thank you. One of the other things that, as I understand the difference, is that the EIDL is through the SBA, and that's the process in terms of applications and approvals, but that the PPP is going through local financial institutions. Is that correct? I know there have been a number of questions that have also come up in terms of, can we predict timeline for decisions? And my bank is saying one thing about each of the programs. Is Melody or Jeff, is that accurate? One's through the SBA, one is through local finance. It's being funneled through local financial institutions, and so there's some different decision-making processes at play.
Yeah.
Yes. Oh, go ahead, Jeff.
Yeah. Sorry about that. That's the one thing that's awkward about this. No, they're both SBA loan programs. And they're both programs that are piggybacking on existing SBA programs. So the PPP is part of what's called a 7A loan, which is not important other than the fact that it's a well-established program that works through your local lenders. We have been advising clients and are hearing anecdotally that that organizations are having the most success if they go to their local lender where they have a credit relationship. There's starting to be some significant anecdotal evidence out there that if you just show up without much of a banking relationship, you walk in the door of Small Town Bank USA and say, hey, I'm here for one of those PPPs. The response is going to be, we're too busy. We're taking care of the people that we already have relationships with. So if you have a relationship with a bank, ideally with a credit relationship where they already know your, they already know you and they can comply with the bank's know your customer requirements, that is ideal. If you're a 501c3 that doesn't have any debt, but you have a depository relationship, quite frankly, that's not as good as a credit relationship, but that's where I would go first. Another piece of advice would be to, find out what board members you have that have relationships. That type of thing might be helpful. Knowing a guy who knows a guy is going to be helpful in this process. On the EIDL loans, those are loans that are made directly to the SBA. There's not an intermediate conduit. So you just go onto their website and do the application there.
Great, thank you. Melody, anything that you would add to that, or insights that you might be able to share in terms of questions that have come up about is the PPP, are they need-based, and if someone's okay without it, should they even bother to apply?
The certification statement that you sign with the loan application states that there's uncertainty, and obviously that's intended and is phrased as such to be pretty broad, because this is far from probably over and no one knows for certain the complexity or the length of when things will be impacted. So there is not a requirement to show a specific loss right now. The intention, as has been said, is to retain employment and hire back if you've had to furlough or lay off employees, to have those come back. If you have other funding sources, though, you may not meet the spirit of that. For instance, if you have program revenue that has not ceased at all because you're in an essential business, then you really don't have a payroll because you're able to keep your full staff. But the wording of the certification allows for uncertainty to be defined by the applicant. The only other thing I would add to what Jeff said is that we are finding that every bank is different on this. It really is important to have that relationship. Not all banks have even started accepting the process or the applications yet. So it's important to do that. Also, with lobbies and so forth closed, that relationship becomes an important piece of even getting somebody to answer and respond to things in a timely manner. The relationships that have been established, though, have been really successful in a lot of cases, and working with a number of our clients, they've gotten great help and great advice from their banks.
Great, thank you for that. I know there has also been a lot of discussion, and we talked about it on our call last week, that the programs are also likely to be oversubscribed, and that this is not that there is going to be opportunities available for everyone who applies. And so I think it's also important to point out that with some of the changes that have come up, there have been some adjustments in terms of charitable giving incentives and in terms of corporations and what the influence is on them. And I think very critical, not only for nonprofits, but also for those small businesses as well, to really understand and think about, this is the time to identify and reinforce your relevance, not just within your organization and your community, but thinking about that from the funder perspective as well. And for corporations, knowing that the gift limits have been increased from 10 to 25% of taxable income. Opportunities for food donations have gone up from a 15% to a 25% cap. And really important to remember that particularly when you think about that relevance, now is the time to hone your message. Now is the time to remember that every ask for funding this is not the best time for that. This is a great time to be cultivating and stewarding those people with whom you have strong relationships, or to see if there's an opportunity with what you're seeing out there with all of the activity from donors and funders about how they're trying to respond in these unusual times, that if there's an opportunity, make your case and go for it. Don't stop fundraising, don't stop development, don't stop building partnerships and promotions, because you're going to need those relationships when we come out on the other side of whatever this spike is right now. One of the questions that's come up, and Jeff, maybe we'll start with you on this and then see what others offer, has to do with 501c3 501c6s, that the 501c3 organizations have been included, but is there anything in there for the 501c6 or those member associations, or are we seeing other options emerging for them?
Jeff, I can jump in on that if you want. So it's true that nonprofit under the PPP is defined as 501c3. Generally, so we're not aware of anything for the C6. I mean, the EIDL is an option because it's nonprofit more generally, but beyond that, we're not aware of anything.
And what would be options and opportunities for the self-employed person or persons, the gig worker as they've been known, or independent consultant, sole proprietor? They seem to also, there's been a lot of confusion about what is available to them.
Yeah, if you are a sole proprietorship or an independent contractor, you are eligible to apply for a PPP. Basically you kind of have to dig into your profits and losses and come up with what your income is. It's an example where your income tax return is going to be, very helpful in that process. But, frankly, we've talked to some clients who were saying, well, hey, can't I include independent contractors, in my payroll costs? And the answer to that question is no. And the reason it's no is because the independent contractor themselves have the right to apply for the program. So they have the right to apply for the program. Obviously they're not issuing themselves W-2. So, one of the challenges will be, kind of documenting what your payroll costs are. But yes, you can do it.
Great. Thank you, Jeff. And Melody, this might be another question for you, spinning off of that 501c6. Certainly the C6s and the C3s, number of organizations have had cancel their meetings or their typical fundraising events, things of that nature. And one of the questions has come up that, there's certainly money that hasn't been coming in, but there's also an influx of funds that is coming in as people are responding in different ways. Any advice that you would share in terms of how to classify donation revenue and expenses that were not used when that event was canceled?
What's going to become important then is the new revenue recognition rules around that. And if they're not providing the event, there is not an exchange element. So that automatically takes it towards contribution. The essential point will be to kind of keep track of what the intent is and what the purpose, because there are two different accounting rules for presenting those at the end of the year. And that's the biggest point. Scott, did you have anything else on that one in particular with the accounting perspective you wanted to jump in on?
Scott Hummerson with Wagner CPAs is also on the call today. And Scott, anything that you'd like to add in?
Sorry about that. My mic was off. The question, Melody, was?
For C6s that are having to cancel events and classification of the money coming in.
Well, at the high level, the fact that 4s, 5s, and 6s, 7s, which are social clubs and others, all of those being excluded, has to be concern overall for the nonprofit community because they all do vital work in our community. So I don't know what the public policy issues were around that. Melody, your question is in regard to what other options do they have?
Well, also talking, at least the way that I understood it, Melanie can jump back in if I'm incorrect in understanding the question, but how are they going to report it? And to me, then that aspect of it, because we're not talking now about government funding, comes back to the two basic accounting rules that went into effect for 2019 on whether it's an exchange related to an event or whether it's a pure contribution.
Oh, related to an event is canceled and the donor decides to make a contribution rather than a sponsorship benefit? Is that the question?
I know that is one of the questions that has come up, is looking at this, because it's a whole new landscape for a lot of folks in terms of trying to figure out how to classify the money. It typically would have been offset by an expense, but now it's not offset by an expense, or if they would have been provided tickets, but now it's considered a donation. Just all of those changes that are out there. And part of what it occurs to me as we're trying to even clarify this question, it really points out, not only are these the times when your relationship with your financial institution or your banker are incredibly important, but these are the times when your relationship with your accountant or your financial manager are also critical, so that you can be identifying what are these, cataloging these questions or these new experiences that you're having, and then working together to really figure out what's the best way according to how you operate your books, in order to make sure that those are handled appropriately and legally moving forward.
Sure. I think I get the question. So the C3s, of course, any payments to them, the individual, the business, the foundation can, deduct those as charitable contributions, and that's clear in the law. The difficulty for some businesses is when they sponsor an event, they treat that as a business expense, not a contribution. And so when the nonprofit wants to convert that to a contribution, there are a number of limits in the law right now in terms of charitable contributions by that can be deducted by corporations. So we may see some corporations reluctant to convert sponsorship dollars to contributions because of that. On the C6 issue, those were never deductible by the donor to begin with. They were only business contributions. And so I guess there'd be some question whether, if the event was canceled and a business made a business expense for a sponsorship to a C6, whether they could deduct something that was not then even an expense. And so without some relief in the tax law, and I know that they, one of the laws I think either proposed or was passed was going to expand the amount of deductions that could be taken both by individuals and corporations. But I think businesses want to do the right thing, but also businesses have to be concerned about their own cash. And I think you're going to see some businesses wanting refunds. It might be a good question for the entire group here is, are they finding that individuals versus corporations or businesses requesting refunds, or are they converting those to charitable contributions?
So we'll take that as a great opportunity for everyone to again get some experience testing this technology. So if you again have that participants window up, you have those things at the bottom where yes or no. So if you are seeing donors or others converting those to tickets or other things to donations, go with a yes or a thumbs up. If you're seeing them wanting them back, no or thumbs down. And then you can also start to see what's happening across this group where that applies in that participant window. Right now what we're seeing is that it's a bit of a mix. Some are, and more are than are not. But again, that's also going to be on that case-by-case basis, as well as looking at the situation in terms of what is that individual donor's financial position, what are their preferences, as well as do they even know that's a possibility. And I know in some cases there are decisions that are yet to be made in that arena because folks have not made those decisions one way or the other about event actual cancellations as opposed to postponement. So we'll be seeing that as we go along as well. So thank you for that. I want to turn a bit back to some of the employment related issues, Mindy. I know there's been a number that have come up through the chat window as you're working through. Anything that you would share based upon what you've been responding to in the chat, as well as any advice or suggestions that you might have in terms of this opportunity that employers may have to move someone from, if they're currently at a 40-hour work week down to a 32-hour work week, or doing some partials or other creative hours adjustments there.
Thanks, Melanie. I think that's a great quick topic of conversation, which is I can give my employees 20 hours a week, but not 40. So can I just reduce, how much they're working, or can I make them take a 10% pay cut, for example, or 20% pay cut and still have them doing the same amount of work? Those are both options that are available, but they have some different consequences. So if you bring your employee, if you keep paying them the same amount of money, but you have them do, if you have them do the same amount of work, but you pay them less money, you may fall into a problem when later on, when the money starts rolling back in, you're probably going to need to bring them back up, bring that amount of work back up. Also, you want to take a look at your policies with regard to PTO, other sort of paid leaves, because a lot of your leave programs are based on hours worked, as opposed to how much you're paying an employee. And you may think, okay, well, if I'm only paying you 80% of your regular wage, then I should only have to give you 80% PTO. But if the intention is that your employees are still going to be working 40 hours a week, then you may actually be still accruing that high level PTO. So you may need to look at those policies and modify those as well. Conversely, if you are telling your employees, okay, we only want you to work 20 hours and we're only going to pay you 20 hours, you also need to make sure that your policies are consistent with what does it look like when we have people working 20 hours. In addition, if you are going to pick out certain departments, for example, and say, well, our administrative department is very, very slow, but our other department is actually really busy. So we're going to take our administrative department, we're going to cut all of their hours down. You really want to take an across the board look at what that looks like to your organization. For example, if your entire administrative department is, let's say, older women, that may have an adverse impact on a certain class of employees. It doesn't mean you can't do it. It just means that you can't just do it right off the bat without looking at some of the consequences to that behavior. Again, just remember that if you do reduce an employee's workload, they can go apply for unemployment then, because they have hours that technically and theoretically they could fill in. But if you still expect your employees to be working 40 hours a week, but you're paying them less, they're probably not going to be eligible for that unemployment insurance. So just make sure you're very clear when you're talking about reducing salaries, if there's a commensurate reduction in their hours as well. Other things that come to mind is you can tell an employee, we only want you to work 25 hours a week. But if their job is a 40-hour-a-week job and they really need to put those extra hours in, you're going to be struggling as far as potential overtime concerns as well. So you really want to make sure that you're being consistent with hello puppy, that you're being consistent with how many hours somebody need to work. Another model I've seen some of my clients do are reach out to their employees and say, who wants to voluntarily reduce their hours for this period of time? You may have parents of small children, people who are taking care of their parents, who say, God, I would really like to only be working 30 hours a week. And that may be a way that you can reduce your payroll number and not upset the apple cart as far as your employees. You may see employees who want to. Most insurance companies are permitting people to stay on the insurance even if they go below that 32-hour threshold or the 30-hour threshold. Make sure your insurance company and other benefits are permitting that, because then you could bring somebody down lower and they could remain on your health insurance too. So those are some of the options. Happy to talk them through more, but those are the things that a lot of people are thinking about right now.
Great, thank you for that. Is anything that you would offer in terms of how individuals or companies should be tracking the reduced hours for reporting to unemployment?
Sorry to unmute myself. I think that you have to track it the way you'd track it any other way. And if you are reduced to an Excel spreadsheet, that's fine. But you definitely do want to be paying attention and tracking and including communications to your employees. A text message to one of your employees saying like, hey, it's time for you to start working 32 hours. That's not going to cut it. You need to have a documented communication where it says, everybody's working these many hours. We do not want you working extra. We do not want you doing this, and really have a clear, concise message across the board.
Mindy, another question that's come in is wondering about the having to prove financial hardship and whether or not the EFMLA and the sick leave exemptions for small businesses under 50 have been outlined in any way that's to better define how to go about proving that hardship.
It's a great question. So I'm going to pull something up. I put out, yeah, so yes, the answer is yes. So when the FFCRA first came out, there was this great, I'll call it great, but exemption for businesses under 50 employees or 50 or under, where they wouldn't have to comply with this if it was going to be a financial or a hardship and otherwise. And then that's all it said. And then the DOL came out and had a question and answer and said, what do we do if we want to apply for this? And it basically said, just document it and don't submit anything to us at this time. We'll let you know. So then recently, last week, they came out with just a bit more guidance in the form of more questions and answers, by the way. It's not a ton. It just gives just a little bit more information. And what it says is, let me just double check here. It provides, and there's 3 specific categories, and I'll shoot it out to this group afterwards because it's actually pretty specific, but it's a little bit awkward because it comes in a question and answer format. I actually sent it to one of my clients last week. So I'll put the snippet together and we'll go ahead and send it out to the group. Melanie, if you could remind me, I'll be sure to do that, okay?
Absolutely. And I'm not sure who wants to take on this next question among our advisors here today. So we're going to have one of those awkward, everyone's either going to talk over each other or everyone will be silent. So we'll see. But it's come up in a couple of different ways, is about whether or not what is known about the additional $454 billion that will be supposedly coming in from the Treasury Department. What do we know about that? What do we not know about that? Will it be available to nonprofits? How's that going to work? Who wants to look into their crystal ball of our advisors here? Mindy, Melody, Jeff?
Well, I think, you know, I think all of these funds that are flowing into the SBA, you know, whether it's the initial CARES Act or any future application, right now they are including nonprofit organizations with under 500 employees as those that are eligible to access this, just as if they were a for-profit. And I guess I'm not anticipating that any future programs would be different.
Fair enough. Another question that's come in, and some of these questions I think they're getting into some of the real stress that also is coming along with this for business owners and business leaders. In thinking about a scenario, if you've been considered an essential business, you're requiring that your employees come into work. What if one of those employees contracts COVID-19, gets sick, and passes away? What can that business do to protect themselves from liability? Are there responsibilities that that employer would have specifically if the deceased family were to seek litigation? Any insights that you could share, or questions that employer could be asking or preparing for what would be an incredibly tragic situation?
I'm moving into pure speculation mode here. I suspect that, you know, if you're in that situation where, I guess I would have a conversation with my business insurer to see what types of coverages that you could get. I mean, this is, you know, obviously we are in untraveled waters here, but you know, I would talk to a good business insurer who might be able to help you around those and maybe, you know, build some coverages for you.
So another takeaway from the call, then, clearly these are the times to make sure that you're having these cultivating relationships with your financial institutions, with your accountants, with your auditors, with your insurers and risk assessors, as well as your attorneys and others, just again to be understanding what are the rules that are in play, how do they apply specifically to your individual situation. Another question that's come up a lot, and again, I'm not sure, it may well be speculation, but I think it's an interesting one, where you have a roommate situation of an employee's roommate who has been told that they need to quarantine for 14 days. And then what is that employee supposed to do? Do they self-quarantine as well? Is that a situation where, in fact, you might advise them to talk not only with their employer about what the situation is and what's happening, as well as potentially with the roommate's employer to make sure that those things are known. Any thoughts, Mindy, that you might have on that in terms of, would that be sort of the sage advice? Make sure you understand the situation and be open in your communication with your employer about what's happening.
I need you to quick relay that again. I was answering somebody's question on the chat, so I'm sorry. I'm guilty of multitasking.
No worries. So if you have an employee who, they have a roommate who has been told they have to quarantine for 14 days as a condition of their employment, what does that employee need to do? Do they also need to self-quarantine? How would that work for that person?
What I would tell that employee to do is definitely reach out to the employer and have a conversation. And from an employer perspective, I would tell that employee to quarantine for 14 days. I would, especially if the person can apply for unemployment, or if they're able to get some other sort of measure of relief, use some of their PTO. I would definitely tell them to quarantine for 14 days before putting their other coworkers in contact with each other. We have got to be on a disclosure, transparency basis when it comes to this stuff. So better safe than sorry I think full disclosure is the play there, for sure.
Excellent. Thank you for that. We are winding down. We have just under 10 minutes left, so make sure if you have those questions, if they haven't already been answered in the chat or in the conversation, now's the time to go and type those in. Or if you typed it in and it didn't get answered, type it in again or copy and paste that, because it just means that we looked through it. I think we've touched on most of the questions that came in prior. There have been some questions about the forgiveness aspect of the money that's available. And again, Melody, maybe this is something that you could provide some insights to. When they think about that, forgiving the total loan dollars, are there any barriers that you would foresee? Earlier you mentioned making sure there was extraordinary documentation happening. Any other advice or insights you'd share for ensuring that they're working toward having those loan dollars forgiven at the appropriate times in this process?
The latest things that have come out with the forgiveness have not really changed. And they pretty much follow what you're applying for with minor exceptions. So it's the making sure that you're showing the payroll and the numbers of payroll people before and after your 8-week period that you are asking for the forgiveness for, as well as having the payroll reports. Some of the information that have seen requested from banks for the forgiveness piece is to ask for the 941 or 41s that would include that 8-week period of forgiveness, as well as the actual payroll reports in hours, if applicable, if not salary. Those are some of the things that I've seen on the bank documents that have been sent out so far.
Great, thank you. If an employee quits, this is one of the questions
Melody,
that came in.
Can I just add to what Melody said?
Absolutely, Jeff, go ahead.
So first of all, I agree with absolutely everything she said. But we've been talking to clients, and there has been some confusion that we run into a couple times, and maybe the group could benefit from what we're hearing from our folks. And there's some confusion about the 75%, 25%, and then the loan forgiveness. So the PPP funds, those funds can be used for any eligible purpose, right? So if employee retention really isn't your problem and you want to use that for rent payments or to service other debt or other eligible costs, you're allowed to do that. And what would happen is, it would impact how much of it is forgiven, but there's not a prohibition against it. So just say, for the sake of discussion, you just say, yeah, we're going to take this money, but we're not going to use it for employees because that's the main problem. And you instead use 100% of it for other eligible costs. You're still allowed to do that. You've just got a 2-year loan at 1%. where you have to kind of think about the 75% for employee payroll costs versus 25% for other eligible costs is on the reimbursement component. So when Melody was talking about, yeah, you got to keep, and first of all, I agree with her completely. You keep very, very good track of that, but that's really for your, eligibility for reimbursement. There's not a prohibition against doing other things with it. I hope that is clear.
Thank you for that additional information. I think that does help clarify things. What happens if an employee quits? You had this great plan, you were keeping them around, and then the next thing you know, an employee has gone off and chosen another path that's no longer with your organization. What sort of impacts does that have?
Jeff may want to jump in on this one as well, but my understanding is that that's still employee choice. And as long as you are showing that maybe you're advertising for that position or it's going to be rehired and that it's not a result of the organization having to let employees go or not having the funds to pay, that shouldn't adversely affect the forgiveness calculation. There is some allowance in that forgiveness calculation for employee fluctuation because it's not generally a static number.
What about a situation if an employer wishes to reduce an employee's salary, but does the employee have to agree to it? If they don't agree to it, are they eligible for unemployment?
So there's two things going on there. There's reducing an employee's salary, but making them still work the same amount of hours. And there's reducing an employee's salary and having them work fewer hours. The employee doesn't have to agree to either of those things, just so we're clear. But if the employee is expected to still work 40 hours at a lesser rate, I don't believe they're going to be eligible for unemployment. Whereas if the employee's salary is reduced and they're working fewer hours, then they probably would be eligible for unemployment for that difference. So the employee doesn't have to agree to it. The employer can make some unilateral decisions. I do want to note there was a question in the chat about reducing the hours or reducing the salary of an exempt employee. Very quickly, because I know we're running out of time, but under the Fair Labor Standards Act, you can't just say to a salaried employee, well, we don't have a lot of work for you this week, so we're only going to pay you for 30 hours. Maybe next week we'll have more work, and maybe it'll be 20 hours, and so just kind of see how it goes. Under the FLSA, if an exempt employee works any hours in a given work week, they're supposed to be paid 100%. It doesn't mean they have to be paid that for the rest of their lives, but you have to come up with a plan for the foreseeable future to say, your job looks like this now, and you're being paid this much as a result. It can't be a fluctuating discussion. So you really want to make sure that you've got that documented correctly. And I think it was Alyssa who had asked that question. I think it's a good one because there are differences based on hourly versus salaried or exempt versus non-exempt employees for certain.
And then Mindy, of course, if you do reduce the salaried employees' wages enough, even if you've reduced their work enough, you may fall below the minimum for making them an exempt employee.
That's an excellent point. At some point, if they're not making enough money, all of a sudden they become a non-exempt employee, and then you're going to have to pay them overtime based on their hours, or God forbid, make sure they're making a minimum wage. That's an excellent point, Melissa.
And I want to say thank you to everyone who participated here today as an advisor, as an attendee, and know that we will have another session coming up next week, and you all can help determine what the emphasis is for that discussion. We will send out, as I said, a follow-up email that will include a link to the recording as well as to the information that was in the chat, resources that were referenced, and a survey seeking your feedback in terms of how this session went, as well as topics and frequency for upcoming opportunities. So please take the time to complete that information and help us guide these conversations as part of our learning community going forward. And again, I want to thank Mindy Rowland with Spark LLC, Melody Bunting and Scott Hummerson with Wegner CPAs, as well as Melissa Scholes and Jeff Femright with Scholes Nonprofit Law for lending their insights and for sharing all of that analysis and data crunching that they've been doing to keep up with all of these changing and emerging issues. So thank you again to all of them. Thank you to all of you. And we will close with some words from Tupac Shakur, "The Rose That Grew from Concrete." Did you hear about the rose that grew from a crack in the concrete? Proving nature's law is wrong. It learned to walk without having feet. Funny it seems, but by keeping its dreams, it learned to breathe fresh air. Long live the rose that grew from concrete when no one else ever cared. So go forward with this new information in your world, and continue to reach out if you have ideas or if you need some additional insights from the advisors, or as you think about what your future looks like going ahead and how to move that forward. We have virtual office hours available through Timpano, so that those are in kind as an opportunity to have someone who could listen to you vent or worry or help you work through some of that as you move forward. So have a good rest of the day and a good week, and we hope we'll all have some additional sunshine from Mother Nature out there in the world.